Welcome to the Financial Freedom Podcast, where we interview remarkable people and share strategies for mastering money and living a meaningful life. With your host, Grant Sabatier, creator of Millennial Money and author of Financial Freedom, a proven path to all the money you will ever need.
This episode is sponsored by Qapital, the savings and investing app that I'll tell you more about in the middle of this episode. Hey everyone, it's Grant Sabatier. Welcome to the Financial Freedom Podcast. Very excited today to have a very special guest, Kevin O'Leary, the host of ABC's Shark Tank, very successful investor, all around amazing entrepreneur. Kevin, really excited to chat with you today.
Thank you very much. Great to be here.
So it's never been easier in history to invest with so many high quality, low cost options. Why are Americans investing so little?
Well, I've learned something over the last couple of years, and then it really came to be highlighted as we went through the stress of the pandemic over the last 6 months. I have a portfolio of over 50 companies now, including our supply chains, thousands and thousands of employees. And the thing that shocked me, when we were getting the PPP loans and trying to figure out how we're going to pivot and what we're going to do to stay afloat. I mean, it's just nothing like this had ever happened before. And when you just shut off retail completely, that's 50% of our sales. Every one of my companies became cash flow negative in March. And so it was a very stressful time. What I learned was my employees, virtually none of them have any investment accounts. They're not thinking about their future. They're not thinking about what happens when they're 65 years old. It really, really shocked me. And, I got pretty granular in digging into this. And I found out that over 100 million Americans don't have any investment accounts. And there's a myriad of reasons for that. One of the big ones is people don't really know how to buy stocks and bonds. It's not easy to do that. I mean, sure, if you're trained in financial services or something, there's lots of ways to do it online, but the majority of the population doesn't know how to do that. So I've attempted now in two prongs. I'm a big advocate for financial literacy in high schools, and that's one avenue I'm working on, but also funding the development of this app, Beanstox, was the other. Very important for me to get people to understand that, it is your own responsibility in your early 20s to start putting away at least $100 a week. That is a good outcome for you for the rest of your life. The outcome is very good when you get older.
So with so many kind of new investing apps coming onto the scene, I was excited to see that you were launching Beanstox. Can you tell us a little bit about it and how it works?
My plan wasn't to develop Beanstox. I was just going to go to one of the ones that already existed and attach, either invest in that or attach my name to it or promote it. But when I kind of did my due diligence, I realized there is nothing out there that, like Beanstox. The whole idea that now I realize has to happen is you have to make investing incredibly simple and easy and just intuitive and transparent. You can't, for example, there's a lot of apps that round up credit card bills. That's interesting, but you're putting 5 and 10 cents aside. Yep. And there's nothing wrong with that. But if you go and look at actually what the options are in terms of investing, I didn't find them adequate. There's other apps that give you incredible power to, create these really complex portfolios, but nobody knows how to do that. I mean, that's the reason 100 million people don't invest. What I wanted was, and I'm a 30,000 foot guy. I went to the developers and said, look, here's what I need to marry with my passion for financial literacy. Give me an app that is real easy to connect your bank account and just set up an amount that you're going to put in it every week, whatever that amount is. I recommend $100, but you can do whatever you like. But if you put aside $100, and most people, the average salary in America being about $54,000, can afford to, not buy that crap they don't need and put $100 aside. And then the app itself would make it incredibly easy to set up a diversified portfolio. I like exchange traded funds, so that's what we're using. But it gives you the ability to tell it your age, and you can see what happens just based on historic market performance. You put $100 aside, you'll retire with between 1.4, 1.5 million. If you start in your 20s, that's enough to live off when you're 65 years old. That's what the app is designed to do. It's incredibly simple. The fees are transparent. It's a one-time monthly charge. $5, no matter how much you put in or how often you access it. I don't want I want it easy, simple. And that is, for me, I've done it with Beanstalk.
One question I get from my audience a lot, and I'm sure they'd love to hear your take, is say you have $5,000 to invest. Everyone watches Shark Tank. We're in the age of the entrepreneur. Do you take that money and start a business that perhaps could grow and create income for you for a long time? Or do you put that into the stock market? I know a lot of people really struggle with that decision.
It's a tough one. And I'll tell you what I've learned over all these decades of being a venture investor. Not everybody can be an entrepreneur, nor should they. The entrepreneurship requires a tremendous amount of unbalanced lifestyle, because during the period you're running a business, you're going to work 25 hours a day. And that's not what everybody wants to do. They want a more balanced life, and they may not have the fortitude to put up with that. And often if you've already got married and you have kids and you have a lot of financial responsibilities, that's risky. And that's why I say, if you're going to be an entrepreneur, do it in your early 20s when you have less liability on your back. But in my experience, I now do a lot of teaching and lecturing to graduating cohorts of engineers and, that kind of thing. And I find that about a third of the class is going to pursue the entrepreneurial journey. But the one thing that I'm just completely myopically focused on, even engineers, even the ones I teach at places like MIT and, you name it. I mean, I love to work with those people because they're so interesting and I get to see their deals early. The ones that are going to be entrepreneurs, even they don't know how to invest. And I just, pound the table saying, men and women in here, you're in your 20s. Can anybody in this class not put $100 aside to invest? And here's why you should. It's a very simple equation. And I always leave those classes getting people, try to get them to download Beanstalks and get them on their journey to invest, because you have to do that. It's not an option. You have to have a strategy for your retirement.
One of the things that I love about, someone like Ben Graham or some of these older investors, they talked a lot about how when you invest in a stock, you're actually buying a piece of the company. And everyone watches Shark Tank. We get excited about the companies we see on there. We get excited about startups. We want to invest in them, but most startups traditionally have been off limits for the everyday investor. But investing in stocks is like investing in an actual company. And my question is, have you always been investing in stocks? Have you been investing since you were in your 20s? And have you seen that grow over time?
Yes, I have. I have been doing that. There's something really interesting about venture investing. When you think about buying the stock market, people see me on Shark Tank. Those are highly risky investments. Mm-hmm. I mean, that is not where my real money is. My money is in a very conservative portfolio of S&P stocks and certain corporate credits that produce income for the various operating businesses I have, or family trusts, et cetera. But there's nothing. The key to investing is forcing diversification mm-hmm. on yourself, and that's very hard for people to do. People fall in love with a story, and they let it become too much of their personal net worth. Owning a stock and letting it become 40, 50, 60% of your net worth is a big mistake, because things change. And as I like to say, poo-poo happens. You need diversification. And that's the number one lesson in investing, is to form or have something form a diversified portfolio for you. Because on aggregate, if you look over the last 150 years or whatever you want to go back in time and look at, the market's going to give you around 6 to 8% a year. I mean, obviously there's volatility in there and there's years that it's down. But when you invest consistently, as any wise investor will tell you, you over time build a very diversified portfolio that delivers those returns over an aggregate period. So if you never invested $100 a week, you just kept it in cash, by the time you turned 65, you had about $200,000 or around that in the bank. And of course, inflation would be eating away at that. If you invested in a portfolio of stocks, a diversified portfolio, you'd have $1.5 million. That's a huge difference. And that is the power of appreciating assets over a long period of time that the market provides. And again, very few people know how to do that, hence Beanstalks, because I wouldn't have gone through the last 2 years working on this thing and investing in it the way I have until it was perfect for what I wanted. Because I've learned now, when I go out and talk to people in their 20s, you need simplicity, transparency. It's got to be easy, really easy.
Everyone in this country, there's such a big focus on getting rich quick, coming up with the scrub daddy idea and selling your company or getting an investor like you or Mark Cuban or Lori. Everyone wants to do it super quick. But what I hear you saying and what I believe in as well is every good thing takes time, and that you should be supplementing, not driving your entire portfolio with your side hustle or with your business. Diversification in all areas of your life is key. But one of the issues with financial literacy is that Americans aren't getting shown the get rich slowly narrative. Why do you think that is, and how can we improve financial literacy in this country?
Well, you're 100% right. I mean, that is changing slowly. In Florida, for example, they're including in high school classes now financial literacy around what is debt, what is a credit card, what's an investment, how do you invest. I mean, obviously, technology's made it very easy to buy stocks and bonds, but if you don't know what a stock or bond is, it's useless to you. It doesn't matter how cheap it is. There's no commissions or fees on these things, but if you don't know exactly what you're doing, it's a useless platform. So, the whole idea, our Shark Tank entrepreneurs, this idea of getting rich overnight, the majority of them takes years, 7, 10 years, something like that. And then only 20% of them usually are successful. And so there's a lot of work. Most entrepreneurs fail multiple times before they find the one thing that sets them free. And we know that on Shark Tank, and we deal with these. Right now, probably 20% of the companies that are involved in travel and entertainment and food services are probably going to go bankrupt in the next couple of years because of the alternate change in the economy, and purchase behaviors have changed, and obviously travel and certain things are going to be different when the pandemic's over. And so those things affect the economy. But what remains consistent, and the market's delivering this now, it sees a new, more efficient America 2 years from now. And that's why it remains near all-time highs. It doesn't matter what's happening out there. Putting aside some money each week is imperative for anybody's strategy. I don't care how rich you are, how poor you are, what your situation is. You must try and put something aside and let it accrue over time so that when you hit your autumn years or whatever you want to call it, you're not in the situation I'm finding my employees in. They're in their 30s and 40s and some in their 50s with nothing set aside. I mean, that just is mind-blowing to me, and I've got to change it. I mean, I can't think of a better thing to invest my time doing, and that's what the whole Beanstox thing is about.
Yeah, one of the great things about apps like Beanstox too is over time, as you save more money, I like to say you acquire more freedom for your life. And it actually allows you to take more risks with your time. And so a lot easier, as you mentioned, to take risks and start a company when you're in your 20s, a lot harder to do if you've got a couple of kids and you're in your mid 30s. But if you have $200,000 saved and can cover your living expenses for a couple of years or 3 or 4 years while you take that leap into entrepreneurship, you've effectively mitigated some of the risk. And one of the questions I'd have for you is, what are some of the things that you see with successful entrepreneurs, and how can someone evaluate themselves if they would be a good entrepreneur?
The focus on customer service really matters. And I've learned this with my successful CEOs is they focus on delivering a product and a service, but then they make sure their customers are happy. They always want to be in the top quartile. And that involves a change. The most successful companies, having proven this out during the last 6 months because of COVID, have gone to direct to customer. They've used technology and decided that they'd rather sell direct as opposed to go through multiple tiers of distribution and retail, which was a big disappointment when it closed down. So now these companies are focusing on, how do I connect directly with my customer? How do I have great customer support? How do I sell them direct at 100% gross margin? And my own CEOs, and I talk to them about their futures, many of them are doing exactly what the vision of Beanstox is, putting something aside to diversify, because the majority of their net worth is tied up in their business as they do rounds of new financing, the successful ones. But they know that they need to have something completely different just in case, again, as poo-poo happens. You can't be guaranteed anything in life. And so by having a nest egg that's diversified, you can fall back on that. So they're doing that thing where they're putting some aside of what they make into other investments. And the easiest way to do it is to use diversification tools like exchange traded funds. This last 5 months, in talking to individual employees about their futures, nothing focuses you more than going through a pandemic to realize what risks there are in life and how you should cushion them. And the way you do that is by investing.
Do you remember when you started investing?
21 years old, and it's really worked out. And that's why I keep pointing to, and I learned the hard way. I made mistakes. I did things that were stupid, and I wasn't diversified for a while. Every investor does. But now I have a very broad-based, diverse portfolio. I'm usually invested. I don't try and time the market. It's impossible to do that. Buy this day, sell that day. I don't do that. You don't know what's going to happen. The volatility in the market recently has been amazing. We've had days in the last few months where the market's gone up 11% in one day. And if you weren't invested on that day, you missed out half the year's returns. So you really can't time the market. And that Beanstox helps you because it really is transparent and it's using broad portfolios of multiple stocks. So you're not stuck with anything that's too concentrated. That's so risky. It's just doesn't make sense. But everybody that uses it, starts to learn more about the market and understand how it works. And then when you start to see your nest egg grow, you become very protective. I noticed that with my own son. Once he actually started putting aside those dollars and he started looking at it every month, he said, wow, I don't want to touch this. I just want to keep going because it becomes part of who you are. And you start to think about your future in a different way and you want to be protective of it and you don't waste money. I think it does a lot of great things. I'm very proud of it.
Yeah, automation is such an important part of money management. In a vast majority of cases, we all know we should be saving and investing, but we're our own worst enemies. Now we're going to take a quick break for a word from our sponsor. This episode is sponsored by Qapital, a banking app that helps you create and automate successful money habits. Designed in collaboration with Professor Dan Ariely, the world's leading behavioral economist, Qapital can help you reach your financial goals with smarter checking, savings, and investing tools. With over 70,000 five-star ratings in the App Store and on Google Play, over 2 million users, and over $1 billion saved, Qapital is worth checking out if you want to take your money to the next level. I've used it and find it intuitive and a no-brainer if you want to maximize the amount of money you're saving automatically and easily. To sign up, go to millennialmoney.com/capital. That's QAPITAL, or go to Qapital.com or download straight from the App Store or Google Play. And don't forget to use the code GRANT to get $25 towards your first savings goal. So how has your relationship with investing changed over time? Now you invest in companies and have portfolios, and I've followed you since the beginning of Shark Tank, and I'm like, how does he keep all of this straight? How do you grow as an investor over time? Because I think a lot of people listening to this would love to own companies or portfolios of companies, but it's very hard to imagine how you get there. Can you talk a little bit about that?
Sure. Every day, I have a portfolio of S&P companies, and I use, as I said earlier, ETFs. So I can get broad diversification. And each month I do a mark to market on all my positions, including the private companies. And every day, including today, there's when you have over 50 companies, you're in constant communication with the CEOs. Every day there's a catastrophe happening somewhere in the portfolio, and every day there's utter euphoria. I mean, it's like an orchestra of just chaos. And that's just the nature of entrepreneurship. And at any one time, 15% of my companies are being acquired or they're selling or whatever. And it's a remarkable outcome. And the thing I've learned, and which is why, particularly in venture investing, you need a very broad portfolio because you have no idea when you start. You could find the best and brightest idea you think is going to work, and it's an utter failure 2 years later. And then the craziest thing you invested in sells for $300 million. And that is actually what's happened on Shark Tank. We've gotten so many consumer goods and services companies that have had huge outcomes, but not the ones we thought. And so that's why, each year when I tape, I'll do 10 or 15 deals, because I have no idea which one's going to work 5 years later. And the portfolio just keeps getting bigger and bigger. But the concept that rings true even in Shark Tank is diversification. You gotta have it. And if any situation in my overall portfolio becomes more than 5% of that portfolio's value, I sell it down to 5%. I never let a stock or a position ever become more than 5%. I've learned that's how you maintain true diversity. And somebody says, well, what about if it's Apple? What about if it's Tesla? Well, I own those stocks. And I've got all my money back out of Tesla, and I'm still, have to keep selling it to keep it at 5%. So I've de-risked that position. I'm very happy with it. I'm very happy I own it. Same with Apple. I've been a seller of Apple, but it's still 5% of my portfolio as it's increased. I want diversification. I need diversification. It's the only free lunch in investing.
One of the things that's very clear is your just infectious energy for investing and also for life. One of the things we talk a lot about is money only matters if it helps you live a life you love. If you enjoy what you're doing, and it seems like of anyone that I've ever seen, especially on TV, you seem to really enjoy your life and you think very critically about the companies that you're investing in. Can you talk a little bit about just someone who's just starting off, maybe they only have $1,000 saved and they're just looking out over the next 30 years and they're just like, gosh, I can't even imagine this slog in a way towards becoming a millionaire or a billionaire. But for me, my relationship with money changes as I grow and over time. And actually, the more money that I have, I tend to find that it has diminishing returns in terms of making me happier, but increased returns in terms of helping to have an impact or make others happier. And I'd love for you to talk about just your relationship with money and how it's helped you build a life that you love.
Yeah, the pursuit of wealth, and I tell my classes this when I teach them, it's always my last lesson of the day is, pursuit of entrepreneurship or pursuit of investing is not about the greed of money. That's not what it's about. It's the pursuit of personal freedom. What investing provides for, whether you do it through the entrepreneurial journey or whether you do it by investing in stocks and bonds over your whole life, is to provide freedom later in life so that you are free to spend your time the way you wish. That is the whole idea. That's the one thing that you should strive for, because you're right. I pursue the things that mean something to me. I'm busier than I've ever been, but every moment of my day is something I want to do. Nobody's forcing me to do it. And I don't have to work, but I do. But that's the freedom that I enjoy because I focused on investing and I focused on entrepreneurship. And, I've been an investor my whole life since my 20s. And so that is the purity of investing. That is the pursuit. Anybody that pursues money for greed usually fails because they're never producing a product or service others want to buy. You have to have a mission in your life if you're building a business up, or if you're investing, you have to have the discipline of putting aside, in my view, I keep pounding this number, $100 a week. I know everybody spends $100 on something they don't need every week. Well, if you invest it, you're investing in your own future and your personal freedom. The worst thing you could find yourself in is when you're 65 and you have nothing in the bank. You are not free. You're going to have to slug it out in ways that are very, very hard to do later in life. It's not that pleasant. And so you can avoid that right now by putting aside $100 a week. And that's what the whole Beanstocks thing was about. I don't stop with that message. I keep, wherever I go, I'm blown away. I did a television taping the other day with an audience of maybe 250 people. And I asked, that audience, who's investing right now? And practically nobody. Just like, so I stopped right there and said, guys, think about this. It's very easy to understand what it's like when you're 65 with nothing in the bank. That's horrible. You got to invest. You got to start in your 20s. I'm going to keep pounding that message till the cows come home.
Yeah, one of the things, well, first, I didn't know that you were so involved in financial literacy, so thank you for all the work that you're doing, especially with your platform. It's an extremely urgent and timely and important issue, and unfortunately, a lot of what's getting covered now, it's, the day traders on Robinhood who are investing in Kodak and trying to make a bunch of money, and I hate seeing those stories because younger investors, that's what they're doing, and it's the paradox of making investing accessible and low cost is that we're a greedy country, and so people try to get rich quick. So thank you for the work that you're doing. I wanted to ask you if you've ever heard of the FIRE movement.
No, I haven't. Tell me about it.
So the FIRE movement, I'm a part of it. We're a group of young, mostly millennial, but increasingly a growing group of people who save over 50% of our income in order to buy our freedom. And that's
I love that idea. Listen, you're doing something very smart. If you can get that message out, I'm happy to pound the table for you. I go to high schools because when the Sharks show up in a high school, we were in Tennessee a couple of weeks ago, we pack the auditoriums. I'm pounding the Beanstalk table all day long, getting those kids at 18, 19, start thinking about investing. Your message is very important. 50%, if you can save half of your income, you're going to do very, very well. Is that the movement? 50%?
Save half. That's the motto of the movement. Save half.
Listen, you're like my mother. She used to do that. She could save half. All her sisters said, you're crazy. You're not having a good time. And later in life, they're lucky they knew my mother because she took care of them when they didn't have anything left. You're absolutely 100% right to do that. That's genius.
Yeah, it's growing. So I actually retired at the age of 30. I was saving over 80% of my income and investing it into total stock market index fund. And then I launched millennialmoney.com and this podcast just to give back. And so now I reach millions of readers and listeners per month all over the world sharing this message that money only matters if it helps you live a life you love. And the higher your savings rate, the faster you're going to reach financial independence. And as you climb that ladder, the more freedom and time and space you're going to have to do the things that you love. And so it's a growing movement and it's growing worldwide. So my book came out in Taiwan a couple of months ago and it's, selling 10,000 copies a week. And
fantastic. I think you've got something that's really important there. That kind of message, that's a discipline that very few people can do, but if they can, they become financially free much earlier in life, which is even better. I mean, that is phenomenal. But that's the whole reason that I say this. I mean, if people like you can get that message out there to kids in their early teens and then in their 20s, they can start to take a portion of what they're making, even if it's an introductory salary, and put something aside, it's the same message. That's the whole idea of my Beanstocks movement, is to do exactly what you're doing in a way that I think I can affect millions of people, because not everybody can put aside 50%. But if they can just put 2% aside or 3%, that's way better than zero.
Absolutely. And you have to start somewhere. I started at 5%, and then you start investing 1% or a little bit more, and you realize that, it's not hurting your life. And in fact, you like seeing your net worth grow more than you like spending the money, and that the future potential of the money, I figured out that every $100 that I was saving, I was actually buying a week of freedom in the future. And so that's how we think about it. It's that money is infinite. You can always go out and make more money, but you can't get back your time. And so how do you invest in a way when you're young that sets you up for life? And I actually figured out I needed less money to retire at 30 than I did at 60 if I could save up enough, because the compounding potential of the money over time would allow me to do what I love. But I work just like you, harder than I ever have before, but it's work that's mission driven and it's so fun. I get to chat with guys like you that I never could have imagined chatting with when I started watching Shark Tank many years ago.
There's one last thing I wanted to mention. I've become a big advocate of equity crowdfunding. And in fact, Beanstocks, I want our customers to be shareholders too if they want to. They can go to startengine.com and they can actually invest in Beanstocks and become investors on Beanstocks too. It's a communal thing. I'm really excited about it. I'm actually a spokesperson for and an investor in Start Engine too, because I've got a lot of my Shark Tank companies using it to raise their additional rounds. Crowdfunding is, what Kickstarter was in 2008. Crowdfunding is now, through the pandemic, become, for me anyways, the choice way to fund my companies.
And last question, we end our episodes this way. What does financial freedom mean to you?
Financial freedom is personal freedom. It's the meaning of life. It's what you can give back to society and your family, is to set yourself free. And the only way to do that is to become an investor and realize the discipline of investing early in life gives you the freedom later in life. It's exactly what you've been talking about with the FIRE movement. It's so important, and it has nothing to do with greed or the pursuit of money. That is not what it's about. It actually allows you to give back later in life in any way you wish. If there's a cause you've been passionate about. Financial freedom is a discipline, it's a focus, it's a movement, and it's all about your life and how you want to spend your time later in life.
Well, Kevin, it's just been an absolute pleasure to connect with you on the show. Everyone check out Beanstocks. That's BEANSTOX.com. And it's just been a joy to chat with you. Thanks for all that you do, inspiring millions of people around the world to not only start companies, but invest in their future. Thanks, and have a nice day.
Take care. Thank you.